Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 8th of November, 2023. So, welcome, everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, also just before we go further, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So, if you have any questions, you can always reach out to us. So, now then, let's jump into the charts. The first one I want to pick up here is Nikkei 225, just a quick update. So we didn't have really much news coming out from Japan, apart from a few little ones like Reuters Tankan Index, which came out the same. So basically, not much. I think it's mainly again Nikkei is reacting to what's happening in general in the markets, and yes, and in general the whole situation in the world. Maybe it's also waiting for next week. Next week we have the Japanese GDP numbers, but we'll get to that next week. That's next week's problem. Now, looking at this from the technical perspective, look, yesterday I've redrawn the chart here a little bit. I've instead of having that range which I had previously, I kind of drawn this one as a rising channel, which to be honest I think it makes a little bit more sense. So, but after we reached the upper side of it, we reversed back down and we tested the 23.6% retracement. That's great. Then I said to you that if we do drop below it and stay below it, then yes, I'll go lower towards that 38.2, which is not far from my 50 and the 100-day EMA. So far, I'm aiming for that one. Let's see if we can reach that. But for my upside scenario, yes, a push back above the 23.6 here is needed, and then we will go from there. We will then aim for the upper side of the rising channel here, and then we'll take it from there, guys. China 50 very quickly. So this one drifted back down. So far, so good, because what I said to you that, yeah, even though if we do retrace back down here a little bit, as long as we remain above the steep upside line here, then yes, there is a good chance for this one reversing back up. However, from me personally, I would like to see a push higher. Let me just bear with me one moment. There we go. Oh, Alfredo, you're changing my lines, but okay. Well, look, everybody likes lines differently, so that's fine. Look, looking at this picture, yes, I said to you before that I will start looking at some higher levels if we do start pushing above the 12,230 zone. Yep, and then ideally I would also need to see a break of that 50-day EMA, and this move here could potentially attract more buyers into the game, and also confirming a forthcoming higher high where we could then target my 100-day EMA. So that's my next target, but for now, let's keep it short and simple. For now, I'm watching what's going to happen here with this upside line. If we clear it and we go lower, then still there is a chance for the bulls to step in, because look, I'm kind of sticking to my game plan and my theory. Whenever we break a trend line, we tend to revisit it from the other side. Well, somebody might say, but hey, what about this one? Well, actually, I would class this as one prolonged break here to the upside. So that's why, we have not really retested it after we broke higher. So maybe this, move lower here could be that. However, I don't want to overcomplicate life too much. So that's why for now, I'm sticking to this upside line. As long as we remain above it, then yes, I will continue targeting the upside in a way. Maybe I will get that rebound and we'll push higher. But if we do break it and we start falling lower, look, my downside scenario will come probably ideally it's from here, this 11,883. But I do understand that maybe that psychological 12,000 mark is something that to keep an eye on. Also, to make our lives a little bit more complicated in this one, maybe this downside line should not be drawn this way. So again, all of these lines are a little bit on the tentative side. Maybe it should be like this. So in that case, we're already testing that broken kind of trend line from the other side, and maybe we'll have a beautiful rebound here. So these are all your options in a way. So whatever you want, figure out yourself. No, I'm kidding, of course. No, look, let's try to approach this from the pragmatic side, from the cautious and calm and cold-headed side, because look, if this is the case, if this is the downside line to consider, then it's even better because we are already having that test of that downside line, which is kind of providing a good support. Maybe, like I said, maybe this rebound here could be possible and we could go higher. But for that problem, and this is why I'm saying that my preference for the upside is still from around here. I need to see a clearance of this whole area, and then I'll get more comfortable with higher levels. If we do want to consider lower levels, then yes, a drop below this downside line, but again, maybe it's this one that we need to consider here. So let's put it this way. If we start falling below the psychological 12,000 mark, now that's where it could become very exciting for a few more sellers. ASX 200 very quickly. So beautiful drift back down, beautiful hold up here above this downside line, and now we're seeing somewhat of a rebound potentially, because we're still kind of near that downside line. So that's why we're not far from my downside scenario. I said to you yesterday, my downside scenario is on a push back below this downside line, the steeper one, and the drop below the 6,955 territory right here. And then yes, this would confirm a forthcoming lower low potentially here from the short-term perspective. And then yes, we could start examining lower levels. But at this point, I'm kind of cautiously leaning towards the upside, to be honest, because this for me looks quite interesting, looks quite bullish. If you're not really comfortable with this downside line, you can wait for a push above the 7,017 territory right here, or maybe even the 50-day EMA. That would be enough. If we clear that, then yes, I will go towards my 100-day EMA or even the 200-day EMA. Dow Jones Industrial Average. So everybody's watching today, today's day. Again, as always, actually. Look, yesterday, first of all, before I go into something else, so first of all, yesterday we saw some positivity, a little bit of positivity, not much. I mean, NASDAQ was still the better one, better performer from the top three. Dow was the weakest one. But the fact that we held above all my EMAs, that just proves that for now this idea works. And I said to you that, look, if we do remain above the all of the EMAs, then yes, great, a rebound here could be possible. But if we start clearing the 100, maybe the 200, then maybe it makes sense to start considering a move towards that 23.6% retracement here on the Fibonacci, which, by the way, I don't think that no longer is valid. So we need to mark the yesterday's high here, and then the 23.6 kind of coincides nicely with that 50-day EMA. So again, a lot of information here. For now, I would say this way: to simplify life, continue monitoring the EMAs because we're not far from them. So maybe we're just gonna go sideways here a little bit. But if Mr. Powell somehow hints to that that we are done with rate hikes somehow, or at least for the very near future, maybe then this is going to help the stock market to push higher, and we could start, shifting nicely to the upside here, maybe going here towards these highs. But look, I mean, let's keep it short and simple. For now, let's first focus on this little territory around the 34,300. If we clear that one, then yes, I will go higher. I will go towards that 35,000 mark or this 35,079 zone, roughly around here. I think I need to mark the whole zone here. That would be better. That's going to be my first area of my interest in the upside scenario. Oh, Daredevil Dave, good morning. You've beat me to it, honestly. Good morning in the chat room. Good morning, everyone. Ah, crap. You beat me to it, Daredevil Dave. Anyway, but thank you. Happy to see you here. Happy to see you. Yes, so, okay. Look, coming back to the Dow here, so that's my game plan. That's my scenario. Downside scenario from the short-term perspective, yes, as I said, these EMAs, and then I will keep an eye on that 23.6, and you can see that my ideal scenario is from around here, from that 23.6, but I get it. Not all of you want to miss out on an opportunity, so another level to keep in mind is here, the yesterday's low on the futures here, the 34,000 mark, 34,000 kind of 32. So basically, in other words, if we do fall back below the 34,000 mark, yes, I'm going to aim for that 23.6% retracement on the Fibonacci. So, like I said, yes, Powell today is speaking. Powell today is expected to kind of maybe hint on something. I mean, at least that's what the market kind of feels about, how it feels, because everybody's kind of watching this one. Everybody's watching this one because, look, 2 months ago or something, then I was even talking myself that, look, they're not going to raise rates in November because they're going to raise rates in December if they need to raise rates. Well, now we can for sure kind of say that, to be honest, I don't think that now they're going to raise rates in general till the end of this year. So, look, unless they somehow inflation picks up and unless you know, all these sales are good this year, for example, if everybody's buying those apples, but as I've mentioned like a few videos ago, that look, I think that they will keep the rates the same, just because going into this holiday season, because look, Apple is not Apple's Apple stuff is not performing well. I'm not saying that this is related, that's why the Fed is not raising rates. No, it kind of all adds on together. So everybody's having problems with sales. And you need those lower interest rates so that people would go and get those little loans in order to get those MacBooks, So yeah, and other stuff, of course. So that's why I again, don't get me wrong, this theory doesn't have any credibility, but it's just my own like personal kind of, let's say, humor, I would say. So, but in general, I mean, maybe in every joke there is a little bit of truth. So maybe yes, I mean, we need to stimulate the companies a little bit. Yes, I mean, lower interest rates can help boost sales, and that's why also we are seeing indices pushing higher right now. So yes, I mean, I think we will continue pushing higher, and especially looking at the S&P 500, for example, here, you can see that we're still below this downside line drawn from the high of the 27th of July, but we've cleared this downside line, so that's great. And we are now above all of my EMAs on my daily chart. So, and also we've pushed above this 4,391 territory, but as I can see that it's not really carrying much significance. So I think that the fact that we've cleared it, yes, great. Maybe this 4,388 zone is something to be watched out for. Okay, look. Let's put it this way. Let's actually choose something. So as long as we remain somewhere above, and this is what I'm going to do. As long as we remain somewhere above this 4,364, or in general above my EMAs, then basically we could see we could see like a rebound here, a push higher. So as long as we remain above all my EMAs, then yes, that's where I'm going to continue targeting the upside. If we start falling back below this, at least below the 100-day EMA, then I'll consider a bit of a retracement back down. JD Invest, morning trend lines should have the maximum touches possible, makes them more valid. True, yes, but as you can see, some tentative trend lines also are valid too, because this is where I say about when it's a tentative trend line, for example, right, this like this right now here, right? This is a tentative because they only have 2 touches, right? But then again, when I'm aiming higher, and if we're gonna get a nice hold up here, so we didn't have that 3rd touch yet, so but it still was valid, so it still was able to kind of, to play out. So look, I'm not arguing here with you. No, whatever what you're saying, this is exactly what's written in theory. But the only thing is that these tentative trend lines, that's why I still put them on the chart, because they might become those important ones, those more valid ones, as you say. So that's why you have to consider all options, all scenarios, all possibilities. And how many times, for example, we've seen when a tentative trend line does not really, let's say, for example, in this case here, let's say, or I don't know, like there's another instrument somewhere. I'll try to find where we had only 2 touches and we broke that. Trend line. Yes, it didn't carry much significance, but it was a good kind of door for examining higher levels. And then I say that, look, we kind of tend to revisit the broken trend line from the other side. And that happens. And then that tentative trend line acts as a good area of support as well. So in a way, how can you, let's say, not take it into consideration? If it works, why not? Well, once it stops working, then yeah, we'll try to invent something else here. But at the moment, it works. Look, at least it works for me. So look, I'm just telling you from my perspective what works for me. You do whatever you're comfortable with. But yeah, thank you very much, JD Invest, for the comment. Certainly, that's like I said, that's exactly what the theory says. So I strongly recommend everybody to kind of have at least some sort of knowledge of the theory. The basics, I would say maybe 70% of that works, but yes, still good. But yeah, it's all about risk management. It's all about risk management, because you cannot really purely rely on technicals. There's fundamental stuff. So it has to be a very nice, beautiful combo. So coming back to the S&P 500, the situation here, yes, like I said, if we start falling back below the 100-day EMA, then yes, I will consider a move lower, at least towards my EMAs or this tentative downside resistance line. NASDAQ 100. Look, beautiful hold up here near this previously tentative downside resistance line drawn from the high of the 19th of July. So basically, great. I would say wonderful. It worked out nicely. My question now is, can we break that? And to be honest, I'm kind of leaning towards that. Break. But I need to wait for that break, because I cannot just purely assume, oh, you know what, it's going to break. Yeah, I mean, look, it can, but if these fellas continue to rally, then maybe this one, yes, could pop nicely. So let's not rush into things for now. Let's keep an eye on this. If we do break this, my next target is the highest point of September near the 15,718 zone, roughly, approximately around there, and then we'll take it from there. Now, in terms of the downside, look, I need to clear up the chart here a little bit. In terms of the downside, this area needs to be adjusted this way, probably. Okay, no, I think I'll stick to this 15,138 zone, so just to be a little bit more on the safe side. So if we do push a little bit lower here, then yes, great. More sellers could join in, but only up to this upside support line, which again is on the tentative side. But hey, I'm keeping it on the chart. Maybe it's not going to play out. Who knows? Maybe it will. If it does, then great. Maybe something like this could play out. If it doesn't, then certainly yes, I'll consider a nice move lower from here. from around this upside line, and then I'll take it from there. The German index, DAX. So, German CPIs came out this morning, and what do we see? Let me just double check, because it came out as I started my webinar. German CPIs year on year, the same as forecasted, 3.8. German the CPI month on month, the same as forecasted, 0. Okay. Okay. So the harmonized index of consumer pricing, that's what's interesting here as well. Also as forecasted, and German, the month on month HICP, also as forecasted, minus 0.2. So in a way, everything is on the boring side, and everything is like very efficient, very straightforward. And to be honest, on one hand, maybe it's good. Now, look, in a way, we're seeing some negative reaction here in the German index, in the DAX futures here. The numbers came out as forecast, but what's important is what were the previous numbers? The previous numbers were all higher. So basically, for example, the HICP month-on-month figure, previous one was in plus 0.2%, was plus 0.2. It came out at minus 0.2. So it fell. And let's say the German headline CPI came out, the year-on-year figure came out at 3.8, plus 3.8. The previous one was at plus 4.5. So we are seeing a gradual decline. Now, someone might say, but hey, that should be seen as a positive. Because why? Because that means that maybe the Eurozone, the European Central Bank is not going to go for any rate hikes. Well, to be honest, I'm not kind of really hoping they're going to go for any rate hikes in general at the moment. They will kind of follow what's happening in the US, I think, more. But and also they will keep an eye on next week's, because next week we have like we have the US CPIs, we have British CPIs, and Friday, for like the cherry on top, we have the Eurozone CPIs. So most likely we'll see what's happening there. That's the more important number than the German one, but the German one is still important. So and we're seeing some negativity right now in DAX. However, the market has not opened yet, the DAX, so the German index. So we are not really seeing, yes, we're seeing a bit of a correction right now, but don't underestimate the bulls, because maybe they will pick up on this information a little bit later, and once the market starts, and that's why I'm kind of leaning a little bit more towards the upside, to be honest, on this one. But look, in general, I'm not really examining anything right now here. My upside scenario is from around here, from around this 15,338. My downside is from around the 15,000 mark. If one of these areas gets cleared, then yes, I'll consider the next short-term directional move. But from the shorter-term perspective, the way we can play it out, for example, for today, if we do push somewhere above this 15,220 zone, I'm leaning towards the upside. For the downside, well, the downside is a little bit on the tricky side, because maybe this is just forming something of a maybe bullish flag, so it could drift a little bit lower. It could break this 15,133 level that I just put here, yesterday's low. But it might give us a false breakout, drift a little bit lower, test maybe the area near the 15,063, and then reverse back up. So that's why my downside scenario is probably a little bit still from around that 15,000 mark. So yeah, that's why my downside scenario at the moment is not really something that I'm considering, unless we start falling below the 15,000 mark. If for the upside there, I'm kind of a little bit more reassured. So, but I need some confirmation breaks before, because again, it's the market. We need to manage our risk accordingly. So jumping into FTSE 100. So this one is still it's still sitting kind of bouncing around this 7,400 zone. So I really don't like it. So at this point, I'm not touching it. I'm just observing the price action and waiting to see what's going to happen, where it's going to end up being in relation to that 7,400 zone. US dollar, there we go. So somebody's waiting for Powell. US dollar, and the US dollar bulls and bears. They're waiting to see who will take the steering wheel. But at the moment, from the technical perspective purely, I'm kind of leaning back towards the upside because we're climbing. We're trying to climb back above the 50-day EMA. If we stay above it, then yes, I'll go higher. If we don't stay above it and we start reversing back down, well, from the short-term perspective, you can actually keep an eye on that 105.30 zone, or maybe even better, actually better, this 105.15, just to be a little bit more on the safe side. So if we do drop back below it, then yes, I'll consider a move back towards the 100-day EMA, or maybe even to 200-day EMA. But at the moment, purely from the technical perspective, I'm cautiously bullish. However, we do have the event today, so where the Mr. Powell will speak. Again, we'll see how the market takes all that in, but hey, maybe it could be a nice one. Maybe it could be a good move. Let's see. Gold. Gold is, yeah, okay. Yesterday it drifted lower. We tested that 23.6% retracement on the Fibonacci. And we kind of cleared it, and then we kind of drifted back up, so it's a bit of a mess, I would say. I didn't like gold yesterday. Well, it's one of those days where I have to kind of take it all in. I mean, it didn't work out as I wanted it to work out, but okay. Those days happen, so let's kind of brush off and start fresh again. So what I'm going to do here right now is, as long as we remain above that 23.6% retracement on the Fibonacci, which is on my chart here roughly around that 1962 zone, as long as we remain above it, I'm going to consider maybe something like this, like a rebound and a push higher. But probably I'll get more comfortable with the upside if we do push back above this territory, back above the 1970 zone. And then, yes, I will go higher. In terms of the downside, yes, a drop below that 23.6% retracement is needed for me. Then I'll target the low of the 24th of October, which is around that 1953 zone. And then it's the my 50-day EMA is my next target. Yes, the 38.2 is also nice, but let's go slowly on that one. Silver, finally doing something. Finally, we're testing my upside line. Look at this. This trend line here, broken a few times, but eventually still somehow carries some sort of significance. We broke it here to the downside, traveled lower, found support near the 220.69 zone, rebounded, pushed back above it. Then it acted as a good area of support, pushed higher, then drifted back down, almost acted as a good area of support, rebounded, pushed back up. Now it's again acting as a good area of support. Question: will we get that move back up here? Look, I said to you before, and I'll say it again, because yesterday I got frustrated with silver because it's a bit of a pain in the bottom for me here right now. If we do drop below this upside line, then yes, I'll consider moves lower. If we start pushing back above the EMAs, certainly I would normally say, yes, I will consider some moves higher than, but we already had a few times that, and I can say that this is not really working out well. Eventually, don't get me wrong, it will work out. But is it going to be this time? Well, if you're comfortable with such a scenario, if this idea is kind of, you're happy with it, then yeah, okay, you can consider it. But the only thing is that be careful, because we might have the same thing again. We could see a push higher above all the EMAs. Great, we gather a lot of bulls, and then suddenly, boom, reverses, takes out all the bulls. And this is why, and you need to be like, either then you put a stop loss carefully here somewhere. I don't know, like, I mean, whatever you're comfortable with. But in general, yes, if we do push back above the EMAs, yes, this creates a more positive outlook. But at the same time, we had the same story here, so it didn't really work out well. However, eventually it has to work out. However, will it be the fourth time? Will it, because this is the third, will it be the fourth time? Will it be the fifth time or sixth time or maybe seventh? I don't know. This is the problem, and we constantly have to adjust. So, but eventually, I mean, it could present itself with a nice opportunity. But as you can see here, my upside scenario is on a break of this downside line drawn from the high of the 4th of May. So basically, I'm kind of allowing this whole area for maneuvering. And if we clear it, and maybe you also clear this 23.7077 area, If we clear that, then yes, great. More buyers here could join in. Oil, there we go. There we go. Look, I talked about this yesterday, and I said to you, look, we were trading below this steeper downside line, and we were still holding below it. What I say to you, as long as we remain below it, my next target is the 77.60. Boom. Fantastic. Mission accomplished. Good result here. Now, if we do reverse sharply and push higher, I think that, yeah, I need to see at least a move back above the 200-day EMA, at least. I don't know where that level, where it's going to be exactly, at what level, but maybe it's going to be somewhere here, maybe here. I don't know, honestly, but I think at this point I will just stick to my, instead of a level, I'll stick to the EMA, the 200-day EMA. Reverse back up. At the same time, if we do climb above the 200-day EMA, then we'll be placed above the downside line as well. So that's why maybe you could start looking at some higher levels from this downside line on the break of it. But I'm thinking that it's easier from this 200-day EMA. But yeah, for now, look, the downside scenario is the main one to watch. We fell below the 77.60 zone. My next target here right now is this right here. This area, approximately in between these levels, or let's put it this way, 73.90. That's what I'm keeping an eye on, and yes, that's going to be my next target. At the moment, oil is not feeling very well. We're seeing strong declines. Yes, I mean, the demand is falling a little bit. Everybody was worried that the Middle East conflict will kind of kill the supply at least a little bit. But as we can see, there is plenty of oil. Everybody's pumping, unless, I don't know, unless there is an issue with, unless Saudi Arabia somehow gets involved into this whole action in the Middle East, then we could see something. Let's say, then we could potentially see the price of oil rising, because yeah, if Saudi Arabia gets involved, then yes, it might be an interesting moment. However, at the moment, I think it's too small of a fish for Saudi Arabia to. It's too small of a conflict. I mean, yeah, I mean, as maybe bad as it sounds, but I think Saudi Arabia would wait until if they feel that there's bigger threat, then they would do something about it. But at this point, I think that money talks, and look, in general, it's if it suddenly becomes profitable for them to jump into war. I mean, war is always profitable, but if it's only, the pluses outweigh the minuses, then yes, we could see oil maybe pushing back up. But at this point, look, I think that even from the technical perspective, yes, we are leaning towards the downside. Nasdaq, we already talked about. Natural gas, look, so far so good, because of what I talked about yesterday here. So we fell below the 3.32 zone. I talked about this, and I said that if we do drop and stay below it, my next target is the 50-day EMA. Boom. Fantastic, good result here. What's next? Well, this is where I want to start drawing some lines, and I think the first one will be somewhere around here. Then I'll draw something around here. So in general, these are good lines, good potential targets. So let's put it this way: as long as we continue to kind of, at the moment, I'm leaning towards the downside still. But let's put it this way: if this upside line holds, a nice, beautiful rebound here could be possible. If it breaks, then I'm targeting that other upside line here, drawn from the low of the 24th of August. Yeah, that's it. That's it with natural gas. Cotton, my beloved cotton. I really, really like it. And look at this beautiful thing here. So we are testing this area. We are testing this territory, the lower side of my range. As I said to you before, if we do clear it, okay, great. More sellers here could join in. We could maybe travel towards this area, towards this zone, towards that 70.22 area which is the lowest point of October. Yep, that's correct. The lowest point of October of last year. or in general, the lowest point of 2022. As you can see, looking at this chart, we have traveled quite a lot. This year is just ranging. The whole year is just ranging. You get those, but I mean, maybe we'll stay like this for the end of this year. But again, we're now currently very close to the lower side of the range, so maybe we could see a clearance of that one. If we get that, great. More sellers could join in, and we could travel towards the lowest point of 2022. But if we somehow this area provides good support, okay, look, I mean, we could see maybe a rebound and a push back towards the upper side of this range. Bitcoin Cash. Oh, no, sorry, Bitcoin. Bitcoin Cash is the next one. Bitcoin, so just a quick update. So we had, again, a push above the 35,611 zone. We failed to stay above it, and we drifted back into this triangle pattern. So maybe something of an ascending triangle is getting formed here. So if we do push above that 35,611 zone again, then yes, great, more buyers here could join in. For the downside, a drop below this upside line, which yesterday I have adjusted it because I had something different here. I had something, I think this I had, but I've adjusted this, and now look at this, how well it's playing out. Look at yesterday's decline. It tested this upside line, rebounded, and pushed back up. So wonderful. Wonderful. And that means that, yes, this is what I'm going to do here. I'm going to keep an eye on this upside line. If that gets cleared, wonderful. I will consider more sellers joining in. Bitcoin Cash, the same story. Look, I'm not going to spend too much time on this because I talked already about the same scenario. For my upside, 249.50 or 250 zone is needed. A break of that is needed. Yeah, we can put it this way probably. For the downside, a break of this upside support line drawn from the low the 17th of August is required. Ripple, this one we forgot to look at. I forgot to look at a Ripple. While I was talking about others, this one was flying high. And look at this. It worked out perfectly. What I said to you before, as long as we stay above this 0.5860 zone, I will continue targeting the upside. Or in general, but if we do clear that now I remember what I said. If we do clear and stay above the 0.59 territory, yes, that's the number. If we stay above it, then yes, I'll consider move higher towards the 0.6363 initially, then the 0.6655. Tick, tick. Both my levels got reached, but the thing is that, well, we reached slightly higher levels. So now I think a few adjustments have to be made. So we reached this key resistance barrier. Let me just grab a few lines here and there. And yeah, I think it makes sense to mark this territory, mark this area. If we do continue to trade below this barrier, this key resistance barrier, then yes, maybe a bit of a retracement back down here could be possible. Let me just see what I can do here. So at the moment we're getting that retracement, so that's all fine. So let's see how the Fibonacci's would work here. Okay, look, I mean, we're approaching that 23.6. Yeah, roughly it's around here. Okay, that's all good, I would say. I mean, this area, just keep an eye on, but to be honest, I really don't like the Fibonacci on this one. I will get rid of it. It's a little bit too crowded. But look, if you need some lower levels, then probably the better option here is to kind of keep an eye on this steep upside line. If we do clear it, then yes, I will consider a move a little bit lower. Dogecoin. So there we go. Beautiful move. I talked about this. I have to admit, it didn't really work out as I wanted it to work out, because I said that if we do stay above the 200 EMA, I will continue targeting the upside. It kind of worked and it didn't, because we kind of started oscillating actually around this 200 EMA. And we saw some downside moves, and I was kind of picking up on this one to the downside, and then it kind of reversed back up. So it's like a little bit all over the place. So it basically just decided to oscillate around this. This unfortunately does happen. We have to consider that as well. But hey, that's part of being in the market. So now what I'm going to do here is, if we do fall back below the 200 EMA and stay below it, I'll go lower. If we, or actually we could also consider, and actually let me just grab this downside line. We can recycle it. Always recycle, guys. So yep, and this is where it could align perfectly. So if we continue to trade above this upside support line drawn from the low of the 19th of October, then yes, a nice good move back up here could be possible. For the downside, a break of that upside line is needed, and also a drop below the 200-day EMA, wherever it's going to be. Maybe it's going to rise a little bit higher here. This level no longer needed. I think that maybe we could keep an eye on something around here, the 0.0709 area. But again, look, for now, I'm keeping an eye on this steep upside line. Let's jump into a few pairs. AUDUSD. Yesterday, we saw some selling action because, again, rates got cut by RBA, but that's, okay, normally it should be the opposite. I mean, rates got cut. Sorry, not, oh, what am I talking? No, rates they rose to 4.35. There we go. What am I talking, honestly? Sometimes you have to filter me as well. No, rates got increased yesterday, not cut. What am I talking, honestly? Nonsense. Rates increased yesterday. RBA went for a 25 basis point hike. And this is where the problem was that normally we should have seen the Australian dollar picking up the pace and kind of pushing higher, but no, we saw the opposite. We saw the move lower, and not because for example, in this case, the US dollar was, let's say, stronger or something. Yeah, it was a little bit on the stronger side, but not by that much. So as I said to you yesterday, I mentioned this in my morning video that basically I think that the market is anticipating that there won't be any more rate hikes this year, and that's why, you know, the investors saying, yeah, you know what, let's then sell our AUD positions and let's sell AUD and let's go aim lower because we're not expecting any more rate increases. So kind of that's the last one for this year. Okay, look. So far, how well we can do here is we can try to play this one correctly, or at least as I think correctly. For the upside, I will wait for a push above the 0.6522 here in order to go higher. For the downside, pretty straightforward. A drop below the 0.6393 territory would be ideal for me, because at the same time we would break this steeper upside support line drawn from the low of the 26th of October. It's a tentative one, but nevertheless, it could be an interesting one to watch. It could be the door towards some lower levels. AUDNZD, there we go. We drifted lower. We found good support, not near the 38.2, but near my other target, because this is what I've aimed for initially. I said to you that I'm aiming for that 1.0822 and my EMAs. Boom. The 38.2, it's good, but I think at this point, let's put it this way. As long as we remain below the 23.6 here, I'm going to continue targeting the downside. Even with these EMAs, I will continue targeting the downside. Maybe we'll go even lower. But if we start pushing back above the 23.6 here percent retracement on the Fibonacci, then yes, I will consider a move higher. Just for that extra confirmation, what I can do here is I can put this downside line drawn from the high of the 1st of November. And if that gets cleared, great. More buyers here could join in. NZDJPY. This one's pushing back up after testing the 23.6% retracement here. This is what I talked about yesterday. I said that if we do a rebound from this area, we pierced it through a little bit, but still eventually we kind of rebounded and pushed back up. So now what I'm looking at here is this. If I want to go higher, yes, I'm cautiously bullish, but I need that clearance of this highlighted zone right here, this area between around this this 89.70 territory. If we clear it, great, I'll go higher. For the downside, a drop below the 23.6 again would be needed for me. USDJPY, where's that USDJPY? There we go. We're approaching my target here, this 150.78. But as I said to you yesterday, that I need to see a break of that one in order to go higher. Well, so far we're not getting that, so I'm just observing the price action. Maybe Powell could do something about it today. Let's wait and see. And for the downside, a drop below the 50-day EMA here is required for me in order to consider a move lower. Basically, long story short, this whole area, I'm just not going to touch it because I really don't like it. Look, for me, what I'm seeing here potentially is a possible kind of triangle pattern. So we're kind of, but the only thing is that I don't see where this is going to end. If it's going to hold somewhere around here, okay, fair enough. But look, at the moment, okay, we can keep an eye on this upside line here. Or maybe actually this one drawn from the low of the 1st of September. I would actually call this upside line also a tentative one because we have a way too big of a gap here. Maybe something like this, who knows? Could be the case, but again, they're all tentative. So you know, maybe this way is better. So that's why, look, this is always a tricky moment with these trend lines. So you don't know. So I'm choosing the slightly flatter one, to be honest, because the flatter one is kind of the last point where, you know, you're considering possible maybe a reversal. So, but if that gets broken, then yes, of course, it opens the door towards lower levels. USDCAD. So we're seeing a push back up, back above this upside line. Okay, look, I mean, that's fine. Yesterday I said that if we do stay below it, then yes, there is a chance for a move back down. But if we climb back above it and stay above it, then yes, there is a chance for a move higher. But I said to you that my preference is from around this 1.3813 level. If we get that break, then yes, more buyers here could join in. So we can get rid of this upside line. And by the way, this upside, the strong move to the upside is coming from here, from oil, because oil is yes, dropping the price. I mean, it's heavily, Canada's economy heavily dependent on oil exports, so we're seeing some weakness in the Canadian dollar right now. So let's see how far we can go here. And I think that what I'm going to do here is I'm going to take a bit of a conservative approach here in terms of the downside. And drop below the 50-day EMA for me now, it would be required. USDCHF, it's oscillating around the EMAs, not much. That's why my upside scenario is from around here, from around this. Sorry, something caught in my eye. I'm trying to get it out. Look, for my upside scenario, I need to wait for a break of this downside line drawn from the high of the 3rd of October. So basically, this whole area is something of a neutral one for me. And normally, I would say, oh, if it climbs back above all my EMAs, in this case here, right? Yes, I'm getting more comfortable, but no, not really. At this point, actually, what I'm seeing is just oscillation around the EMAs. Maybe it's forming actually a bearish flag. That's the case. Maybe it's forming a bearish flag. We have our pole here. So maybe we could drop lower. But for the downside scenario, I need to see... Now, for the downside scenario, I need to see a drop below all of my EMAs in order to consider slightly lower levels. GBPNZD. Ooh, this one is a pain in the bottom and at the same time very, very nice. Look, in terms of British data sets this week, let me just quickly double check. We have Governor Bailey from the Bank of England speaking this today, actually, I think, yeah. Okay, look, maybe there will be some movement in GBP. But I think that not much is happening. No. Apart from Friday. Friday GDP figures. We do get the GDP, preliminary GDP, and no, we actually get normal GDP numbers. So yes, month on month is expected to decline. So let's see if actual number is going to come out much lower. So we might see a drift further south. So at this point, look, the downside scenario here, even though it got violated a few times, somehow it's providing good resistance. But some of you might say, but actually maybe it's not the downside scenario, downside line. It's the EMAs, the 100 and the 50. And actually, I will say, yeah, you're right as well, because but it's just that somehow all this aligned beautifully, nicely together with this downside line. So in general, yeah, you can keep an eye on the EMAs as long as we remain below those. My next target is the 200-day EMA, and then we'll take it from there. GBPUSD very quickly. Yes, the same story. Look, yesterday I talked about this, and I said to you that I'm keeping an eye on the 50-day EMA or this broken downside line. I said to you, we tend to retest trend lines, broken trend lines from the other side. Hey, judging by this activity, maybe this is on track to go lower and test it out, you know. So for now, but at the same time, you should not exclude dismiss the power of the 50-day EMA. If we continue to trade somehow above it, then yes, I will consider this reversal a little bit earlier, because maybe we're forming something of a bullish flag here. Who knows? And then maybe, yeah, we could see some higher levels. But at this point, I'm keeping a close eye on the 50-day EMA. If we do drop and stay, well, if we continue to trade below that 50-day EMA, I'm leaning towards a larger correction to the downside, towards this downside line tested from the other side. Euro GBP, my unfavored pair, the most hated by me pair, but you know, hate and love does kind of go sometimes hand in hand. But look, I have to say, it kind of worked and it didn't. So it did drop below this territory and we tested the upside line. Yes, we did, but we violated it. We drifted lower. Then it's all over the place. So that's why I want to get rid of everything and start fresh. One thing I'm going to pick up on, of course, are my EMAs. As you can see, we now have started like pushing the 50-day EMA, started pushing above the 100. Okay, we pushed higher, then we had a retracement back down, and now we cleared the 200-day EMA. So now my question is, actually, can we see maybe a drift back down here, and then maybe the 100-day EMA, shown as the green line here, could start clearing the 200-day EMA, and this way, yes, beautiful move to the upside. Then we could see a beautiful move to the upside. We could see something like this. At the moment, look, I don't have a specific level unless it's this one, the current lowest point of this week, a drop below the 0.68650. That could spark some selling interest, and we could start drifting lower towards some of these targets. But for now, I'm still cautiously bullish. Like I said, I'm not excluding the possibility of a reversal back down here, just to allow that 100-day EMA to approach the 200-day EMA, clear it, and then push higher. And then this is where the buyers could jump in and travel north. EURCAD, very quickly. So after a beautiful move above this downside line, we cleared my 1.4695 territory. And great. I would say, now what's next? Next is, yes, I'm still bullish. Because why? Because we remained above my 1.4695 territory, and yes, as long as we stay above it, I'm going to continue targeting the upside. If we start falling back lower here, I'll take a neutral stand, because if it somehow falls back below this downside line, maybe we could start looking at some lower levels. But again, there are some things to consider, other things to consider. So at this point, I'm cautiously bullish as long as we remain above the 1.4695 zone. And finally, EURUSD. So what I said to you yesterday, that if we do drop back below the 1.0695, I will consider a move lower, and I'll stick to my word, and I'll consider a move lower towards that 50-day EMA, because at the moment, we are back below the 200, the 100-day EMA, so maybe we're on to going on and like for a retest of this this 50-day EMA. So look, I said to you yesterday as well that keep your eyes. Maybe we'll get a test of this area somewhere, and there we go. We did. Look, it's a tricky one, I have to admit, because at the same time, maybe it's a bullish flag. We have our pole, we have our this correction, and yesterday maybe it's going to reverse back up here today. Like I said, let's keep an eye on Powell. Let's see what he has to say. Let's hear what he has to say. Let's see. That's why I wrote there and in the heading, let's see what Powell has to say. So anyway, a little bit of my lame humor. For now, I would say this way: if you're looking for some lower levels, there is a good chance for seeing that, as long as we remain below the 1.0695. But then I'm still aiming for that 50-day EMA. But as you can see, if I have this other arrow here. If we clear that 50-day EMA, that's from where I'm going to go further south, and then I'm going to go lower towards the 1.0560 or even below that. For the upside, if we start somehow from the short-term perspective, because ideally my upside scenario is from around here, but let's say from the short-term perspective, if we start pushing back above the 100-day EMA right here somewhere, then yes, I will consider a move towards the 200-day EMA, and then maybe, like I said, this highlighted zone here on the top, which could be that nice barrier for further upside if it gets cleared, of course. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, your views, your comments, guys. Honestly, Daredevil Dave, JD Invest 1, thank you very much for that. I really appreciate it. I really appreciate everybody else who tuned in and kind of stayed quiet in there. But look, I respect your your quietness as well, because again, I do that too. But yeah, look guys, in general, thank you very much for tuning in. Really appreciate that. And as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. Thank you very much, and I'll see you tomorrow, 7 o'clock GMT time. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.